Hey everybody, Boris Lasser, BK Force. Welcome to the Where Are the Trades edition for February 9th through the 13th. Really interesting week, of course, this week. Very, very volatile trade, capping it by the end of the week with some massively, I think, important dollar moves. So we had a very, very strong NFP. At this point, I think it was almost a transformational data point in a sense that everything was positive, including wage growth. And it does put the prospect of a June rate hike quite on the table, especially if we have a couple more of these kind of strong numbers. At very minimum, it definitely puts the idea of a rate hike sometime into September. So from that perspective, I think it puts the renewed pressure on the anti-dollars and definitely puts some upward thrust on a dollar across some of the pairs. Now, the euro has been beaten up so much that I don't know how much more juice there is left to the downside, but certainly it's possible given today's data and especially any kind of additional turbulence from Greece. Because we have a next Wednesday as a deadline for when Greece is going to finally sort of decide its position vis-a-vis the euro and the ECB. We do have potential here for a shakeout to a double bottom test here. So this 111 is a very, very key area of support, and it's quite possible the euro could revisit this area after the strong move in the dollar today and possibly more negative news out of Europe. So you could have this 1-2 bang that could push us down there. After that, it's really anybody's game. It all depends on how bad the situation is within the European theater. The one positive thing that I keep talking about is that lower euro, lower oil prices ultimately are very positive for the European economy. And that, in a sense, I think is what the market is seeing, which is why I think downside price action in the euro may be limited unless, and this is a critical thing, unless things get so bad politically that we begin to have the stress of fracture in the eurozone. Then all bets are off, and you could see parity on the prospect of fracture. But if we're basically just playing games and the economic situation in Europe actually sort of begins to stabilize, it looks to be that this 111 is pretty much the firm support. So if we get down to those levels, it's probably going to be more of a buy than it is a sell. But having said this, we still have a couple hundred points here to test the double bottom, which could be very much possible next week as the euro trade evolves. Now, dollar yen also, I think, ended up very strong. This is a really nice bullish close on dollar yen. We said that it has to close above 119 to really change the psychology of the market. The market has been very negative. Dollar yen, we've had lower highs continuously on a technical basis as the market was very, very skeptical. Today, a lot of that skepticism was erased. We had a massively strong move, very sort of emblematic of this kind of a strong move that we had here. So the question is, do we have further continuation? I definitely think we have potential here for at least 120 in dollar yen. It's very likely that when we open up in Asia, there should be more continuation as a lot of the Asian traders scramble to try to put on long dollar positions. So after that, it really becomes an open question because then we're going to see just how strong the U.S. economy is and whether the global economic data begins to improve. Because in many ways, it's not just a question of the U.S. doing well. It's a question of U.S. doing well and making the rest of the world at least stabilize going forward. Because the one thing I think that everybody does appreciate, that even if U.S. does well, but the rest of the world really does poorly, it's going to be hard for the Fed to justify a rate hike amidst that environment. It needs to be convinced that the global economic conditions are conducive for further growth. So yen looks very interesting. 120 now becomes the next big area of target, and that's where we're going to be going. Pound dollar corrected, but not nearly as much as the euro. And I think this is an interesting trade here, that there's a relative strength trade to the pound because also this is the Anglo-Saxon sort of story, that both Anglo-Saxon economies have actually done better than market thought. The PMI data from UK was much better this month, and this also puts the idea that UK may follow. Certainly, I don't think it's going to be at the same time, definitely not ahead of the US, but may follow. The BOE may follow the Fed 1 month or maybe 2 months after the Fed moves. So that makes the pound much more interesting on a relative strength basis. And you can see this also in the euro pound, where we've had very, very strong move to the downside, testing the 74. And I think the next big move, as a matter of fact, if the euro moves down to the 111s, we could see the euro pound now trade back down to 73s on a relative strength basis. That's quite good. The other interesting trade on a relative strength basis is the pound yen. If we like the yen, we like the pound. You can see that's really trading quite well. 82 is sort of like the next level of resist, but we could really trade ourselves all the way back up towards the 84s before I think you find any material resistance from this overhang here. Very, very strong W formation bottom here. Suggests further extension here. So pound on a relative basis looks quite good. Aussie is next, and Aussie sort of continues to flame out. This is what's interesting to me about the Aussie is this oscillation between the sellers coming in at 79, the buyers coming in at 76. It clearly seems to be in sort of an equilibrium level at around the 77 level. The RBA did threaten to cut further rates, and it looks like it may be signaling that there'll be more rate cuts to come, in which case I do think the Aussie is vulnerable to further downside. But having come down so much, and with commodities, this is really going to be the key story, commodities stabilizing. Now, this is, I think, probably the primary driver of trade in the Aussie over the next couple of weeks. If oil stays around 50, which in turn stabilizes the rest of the commodity complex to a relatively decent degree, there is a potential here that we could just simply tread water and kind of hold steady between the 79, 76, or 79, 77 range, as we've done in the past for a while. This is a very, very broad range. The 76 to the lows here, in order for this to get broken, would mean really much, much worse deterioration in the commodity prices, at which point the market will become convinced that there'll be at least 2 more rate cuts from the RBA, and we could break those to the lows. Until then, it looks like to be a range trade in the Aussie dollar for the time being. Dollar CAD is the new roller coaster trade, and it's certainly been a really wild trade. The numbers today were pretty good, but most of the gains were actually in the temporary jobs, and I think ultimately the lower oil prices are going to wash themselves through the Canadian economy for further weakness. So there's potential here for a re-rally back up to the 27, 28s. But now, I think one of the interesting things that you see here is that typically after very, very large volatility moves, volatility compresses. So it's really quite possible that what we're going to see in the commodity complex is actually a relatively low volatility band of 24, 26s in CAD, just like we have a 70, sort of a 77, 79 band in the Aussie. And we may actually start to see a little bit of calmness after this incredible turbulent move that we've had here for the last couple of weeks. The last thing I want to take a look at was the Kiwi. And the Kiwi did turn back today, but Kiwi also showing, I think, a little bit of relative strength here. And that's interesting to me. Like, if you want to look at the Kiwi on a relative basis, you see, where's my Aussie Kiwi? You see the Aussie Kiwi kind of basically stabilizing here, but I think the Aussie Kiwi here, if we start to see further commodity weakness, could potentially break this 105 level. This 105, very, very important, because a break at a 105 takes us right back down towards the test of the 103s. If Aussie continues to lower rates, it really seems to me a very natural trade, like for very long-term traders, that Aussie Kiwi goes to parity. So if you have a strong conviction that the Australian economy is going to see at least another 50 basis points of risk, is because the one thing that you know is that the New Zealand economy, while not is not going to ease, it's certainly not going to cut rates in the near term because of the real estate problems that they're still having, and because of the fact they're just not doing as badly. The dairy prices have been much better there. So there is a potential very, very long-term, very big trade of looking to parity in Aussie Kiwi on the assumption that you're going to get further interest rate compression, in which case the Kiwi becomes much more favorable to the Aussie on the interest rate basis. The next thing that I kind of want to look at, I want to look at the Kiwi CAD as well. Let me just pull that up. I don't think I have the Kiwi CAD here. On the commodity, because I think the intra-commodity story could be kind of interesting. Here, and the Kiwi CAD is definitely stabilizing here at around. This is a question of whether, does the Canadian dollar, if oil comes back down a little bit more, there's a potential here for a run back up to 94. It's just on a relative weakness basis in Canadian dollar. But for now, this 91 seems to be a pretty decent hold. And unless we see oil really spike towards the 60 level, which, of course, possible but not likely. But if we do spike it back up to 60, only then do you have the danger of breaking this 90 level support in Kiwi CAD. So it's another kind of interesting low volatility trade to take a look at in the near term. So that's how the day week shapes up. We're basically going to be looking to see how much more rally in a dollar there is after this very, very strong NFP, and also, of course, to see just how badly the shakeout with Greece is going to happen next week on Wednesday. Those are the primary headline stories, and I wish you guys the best of luck and the best of trading. Boris Schlossberg, over and out.